Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, GIFT Nifty hinting at, that 21,000 mark on the charts for us. So we will be waiting for the markets, in fact, for the Nifty to conquer that crucial level in today's session. Of course, we've been hitting new highs on a daily basis ever since, the state poll results showed a clear majority by the BJP government. In today's session, we'll be talking about all the cues, including, Wall Street, which has ended mixed. And of course, Asian markets are also trading mixed. But as I mentioned, it's the GIFT Nifty that is taking center stage this morning. Lots of stocks in focus, including the likes of Bank of India and India Grid. And of course, some news flow around Sun Pharma as well. So we will be taking up these stocks with our experts on the show. But if you have any stock related queries, send them in to us on our YouTube feed and we will try and take them up with our technical expert on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed with the Dow and S&P ending lower and the Nasdaq eking out slim gains. Asian markets as well trading mixed. But as I mentioned, the GIFT Nifty is hinting at a dash at that 21,000 mark for the first time ever. Crude prices slipped for the fourth straight session with the Brent near a 5-month low of around $77 a barrel. Stronger dollar and underwhelming production cuts announced by the OPEC Plus are dragging prices down. The RBI's 3-day MPC meet gets underway today. Majority of the economists expect the RBI to leave rates and stance unchanged. Growth forecasts, however, are expected to be revised higher after the second quarter GDP figures came in much higher than expectations. Congress party picks Revanth Reddy as the next Chief Minister of Telangana. The swearing-in ceremony will take place on the 7th of December. Severe cyclonic storm Michuan makes landfall on the Andhra coast. Over 61,000 people are shifted to relief camps while large parts of Chennai remain waterlogged and without electricity. The heavy rains have left at least 9 people dead. The Chennai airport, however, has resumed operations. Well, let me first bring on board Kush Bohra, who's the founder at kushbohra.com. Great to have you on the show. Good morning to you, Kush. When you look at the charts and you see the figures, I mean, you have a sense of disbelief, right? Because, a lot of experts were saying 21,000, 22,000 by next year. But then it's becoming a reality now itself. On the charts, given the fact that GIFT Nifty is hinting at a, dash at 21,000, we're just about 145 points away from that landmark, level on the Nifty. Do you expect or, other charts indicating that we are poised to clock that level today?
First up, Nandita, very good morning to you and a good morning to all the viewers. And thank you for having me on the show. Well, you're right. I mean, this is the direction is fine. Everyone was expecting the direction of the Nifty and the Bank Nifty perhaps to be up. But it's the pace of the movement that has surprised everyone positively, isn't it? So there are a couple of indications that are suggesting that 21,000 is obviously on the cards. And I think it's now a mere formality. What's more interesting is the fact that, we've gone into overbought territories for the last 2 days and still pushing higher. So from here on, a little bit of caution is warranted. I wouldn't be surprised to see the markets, head higher, even past 21,000, let's say, 21,600 kind of levels in the next couple of months' time. But they won't be a linear move, right? And there'll probably be a dip or two. What's heartening to see is the fact that the Bank Nifty has started to participate. And I can tell you, with a great degree of certainty that this is directly correlated with the FIIs returning. FIIs always have had IT and banking as one of their favorite, a couple of their favorite spaces. Now with the FIIs returning and how the Bank Nifty is expected to do well. Even with this up move, the Bank Nifty sort of underperformed the Nifty, year to date so far. So even if that catch up happens, I think, 48,000, 48,500 on the Bank Nifty, is very easily achievable from here. But that said, I will either trail my stop losses or book profits at these level. Yesterday, we saw the broader markets also cool off a little bit. So perhaps something, similar could be seen on the indices today, perhaps tomorrow, given that, we are staring at the weekly expiry for Bank Nifty today and Nifty tomorrow.
Right. Hold that thought, Kush. We will come back to you and discuss specific stocks and other sectors as well. But let me also bring on board Siddhartha Khemka of Motilal Oswal joining in this morning. Great to have you on the show, Sidhartha. First of all, your thoughts on the kind of, on the pace of the rally that we have seen so far this week. And, of course, right now, what would be a bigger risk, according to you, being underinvested in these markets or, valuations getting out of whack? I mean, what do you think? And what kind of an upside do you see in the run-up to the general elections over the next 5 to 6 months?
Yeah, very good morning, Nandita, and to all the viewers. So I think, see, if you look at the market, definitely the pace at which the market has gone up, especially if you look at the key indices, that has definitely taken everyone by surprise. But look at what is happening. Even on the global front, market has been quite supportive. Dow is at 52-week high. The US Fed commentary suggests that we are at the peak of the rate hike cycle, and we could see no more rate hikes. That is a big comforting factor for the global economies. And back home, we are seeing very strong economic growth. Corporate earnings have been pretty strong. FIs, which have been buying in the previous few months, and then we saw some selling in the last 2 months, have now returned with a bang. So that is also helping the cause to the market. If you look at valuations, yes, valuations are not cheap. But still, I would say with the strong earnings growth that we are seeing, Nifty Q1 EPS grew by about 31-32%. Nifty EPS in the Q2, the just concluded quarter, the earnings grew about 24-25%. And if you look at the full year, asking rate that we are penciling in is about 20% for the full year. So the asking rate for the next 2 quarters, generally we see that H2 is much stronger. The festive season has been pretty strong in the last 2 years. So we believe that with that kind of growth, around 18-20% earnings growth, valuations are still comfortable at 20-21 times 1 year forward earnings. So I would see that there is definitely room for more upside within the index. And if you look at within the index, there are a lot of sectors which are now doing up the catching up uh, uh, in terms of valuation, in terms of returns, which are not participating. And the biggest of that sector has been banking and financials, that about 38% of the Nifty, and they were underperforming for last 1 year. And the momentum has just started. So I think there is definitely a lot of room for upside in the index. And specifically, if you look at certain pockets within the indices, broader market is looking way more comfortable, where the growth numbers are much higher compared to some of the large cap companies. So I would say that overall, need to be stock specific. Valuation definitely will play a role. Stocks and sectors where valuations have seen a run up could see some consolidation, and stocks and sectors where the earnings growth trajectory is picking up is very strong. Those are the sectors where there would be a lot of focus in the market.
So, you mentioned to be stock specific and, look at certain pockets. We know so far GDP growth, of course, has been strong in the second quarter. But so far, manufacturing has been driven by government capex, right? And on the other hand, private consumption seems to be slowing down. So, for the next 2 quarters, should one position themselves in industrials, or do you think consumption will play a role and will see a pickup?
So another very interesting question. If you look at, as I said, the Q3, which is a bulk of the festive season, we have seen very strong consumption data from across sectors. You look at the real estate companies; they have reported record pre-sales numbers. Auto companies, two-wheeler companies, they have reported strong sales during the festive season. So consumption is a trend I think would continue. But interestingly, what is happening is that with the state election outcome, there is a strong view in the market that the continuity in the government policies would help the industrials, the manufacturing sector. And if you look at bulk of the public sector enterprises, the PSE companies, they have seen strong interest on back of this large event, given that these general elections is due mid of next year. This kind of comfort is definitely giving a positive view for the industrials as well. The private capex cycle is picking up definitely with the capacity utilizations across the economy going up, but it would definitely be largely driven by the government capex.
Right, you mentioned two-wheelers. Of course, we've seen a very strong run-up in some of these two-wheeler stocks, the likes of Bajaj Auto, a case in point. But, this morning we have a brokerage report. CLSA has downgraded some of these companies, saying that, valuations are fair at these levels and there isn't much room for upside. But if you look at the PE multiples for Bajaj Auto, Aisha, they are still below long-term averages, the 5-year average. So do you see room for more upside, or do you think much of the rally is behind us?
Yeah, Nandita, I think definitely there was a case for a strong upside in some of these two-wheeler companies. But if you compare the valuations, Bajaj Auto, the current valuations are definitely a bit on the higher side, definitely a discount to its long-term averages. But if you look at Hero, which was trading at a big discount, has now done the catch-up. And iShares has always traded at a premium valuation, so I don't see any reason why the momentum should not continue in some of these stocks. In terms of valuation, if you look at, again, as I was telling you, Hero is still trading at about 18, 19 times on FY24 and about 17 times FY25, which is a lot more comfortable given that the growth that they are reporting is very strong. For this year, we are anticipating an earnings growth of 38%, and on that high base, a 7-8% growth next year. But if you look at on a CAGR basis, a 20% earnings growth and valuations lower than 20 times. So I think there is definitely room for more upside. As I said, we have recently changed our view, or you can say the preference within the auto sector from passenger vehicles to two-wheeler space. We believe that the growth that we are seeing, the strong demand, should continue and only accelerate for two-wheeler space companies in the next 2 quarters compared to passenger vehicles, where we have seen a good quarter. We've seen a good festive season, but growth could kind of consolidate from here. So, and even on the tractor side, things are kind of a bit slowing down. So, in terms of preference within the overall auto space, we like the two-wheeler space, followed by the LCVs and the MHCVs, where again the industrial growth is helping the CV cycle. But we are kind of a bit neutral on the passenger vehicles and tractors within the overall auto space.
Right, last question to you, Sid, about the Adani group of stocks. I think ever since the SC observations, Supreme Court's observations on the Hindenburg case, we've seen a very strong rally, on the Adani group of stocks every day. In fact, most of these stocks are clocking double-digit gains. In fact, I think 3 of the stocks have also recouped all of their losses that they saw, ever since the Hindenburg report came to the fore on the 24th of January, right? But within the pack, what are the stocks that are catching your fancy now? Would you stick to the cement names like Ambuja, ACC, or would you say that Adani Ports is something that is looking attractive?
Yeah, Nandita. So, as you said, within the overall space, we hardly have much coverage beyond A, Adani Ports, and B, the cement stocks. And both of these segments we like because of the market leadership that Adani Ports has within the ports infra space. And the economic growth cycle that we are seeing. We believe that volume growth as well as their expansion into certain other regions, that is helping the company to gain market share even more. So Adani Ports is something that we like. Within the cement, we are definitely positive on the overall cement space, and within that, the Adani Group companies, ACC, Ambuja, they are in the consolidation phase. They are looking at adding capacity at a much stronger pace than what they were doing earlier. Plus the efficiencies that will bring in with a larger economies of scale, as we know that it's a capital intensive business. So definitely we would say that within the overall group where we don't have much coverage, these are the 2 segments that we like. But again, Adani Ports is a buy for us. Ambuja Cements, currently we have a neutral rating.
That's the view then. Of course, cement and Adani Ports is something that is looking attractive. With that, Sidhartha, thanks a lot for taking out time and sharing your thoughts with us. Look forward to connecting with you sometime soon.
Thank you.
Well, let's go back to Kush then. Kush, Sidhartha was saying that, Adani Ports and cement, within the Adani group of stocks looking attractive. But on the charts, would you see more upside for an Adani Enterprises, perhaps Adani Green as well?
Typically from the entire pack, the couple of stocks that have been on our radar have been Adani Ports, Adani Power, and then Ambuja Cements, as and when the momentum comes in. So right now there is a case for Adani Enterprises because, this stock had a lot of catching up to do, but it's done, all the catching up in the last couple of sessions itself, right? So I will wait for some kind of a dip on Adani Enterprises, perhaps a dip, closer to 28.50, 28.75 kind of levels would be a good entry point. So yeah, considering the underperformance that this stock had, buy on dips is perhaps a more prudent strategy here. If you buy close to 2875, then 3000 and 3150 are the positional levels that you could look at as your targets, and 2775 is where I would place my stop loss. The stock has a strong support there as well. The other one that you mentioned is Adani Green. Well, it's a very similar story here. A long phase of underperformance, and then covered up in just the last couple of sessions. So similar story, buy on dips. In fact, the entire pack right now is in a buy on dips kind of a strategy. But we would have Adani Ports and Adani Power as our top picks. The other names could perhaps just be a momentum play.
Right. I think the wait for dips could get a little longer because all these stocks have been on a tear, and we are witnessing double-digit rallies on all of these stocks on a daily basis now. But let's talk about a Bank of India as well. It's a stock of the day for me, given the fact that it has launched its QIP. Of course, it was an exclusive that was broken by CNBC TV 18, and now it has been confirmed. The issue size is 4,500 crore rupees, and the indicative price is at a 9% discount to closing price. Shares have done well. I think it's very close to its 52-week highs now, Kush. On a YTD basis, 20% kind of an up move, in tandem with other PSU banks. So this particular stock, on the charts, do you see, levels of 120 or thereabouts perhaps in the next couple of weeks itself?
Very likely, very likely. However, just one small caveat here would be the fact that the stock has a resistance close to 112 levels. So if in the opening that level is taken out and the momentum sustains for the next 15 to 20 minutes, this stock could very well move make a dash towards 115 and then 120 levels. At least on a positional basis. The good thing is that the stock hasn't really given a tearaway kind of a movement. The volumes have seen a pickup, and the momentum indicators are also suggesting an uptick. So all in all, it's got everything going for it. It's just that 112 has a resistance in the near term. So once that is taken out, 115 and 120 are the levels that one can play for. On the downside, 105 is where a couple of averages are converging, so that could be your stop loss.
All right, of course, Bank of India is one stock we'll be watching out for in today's session. But, quickly going through the brokerage call of the day before we take up our viewer queries, there is a report that has come in from Jefferies on the power sector. Of course, stocks like NTPC have seen a phenomenal run since the start of the year, right? 78% kind of gains on, on the charts for NTPC itself. Now, Jefferies has made a point that, peak power shortages are likely to stay for the next 18 to 24 months. And power demand, the strength in the power demand will be driven by both industrials as well as households. And power generation, investments in power generation, according to Jefferies, should rise over 2x in between FY24 to FY30 vis-a-vis FY17 to FY23. Power stocks have been, all charged up, the likes of NTPC. In fact, I think even Power Grid has had a very good run. So on the charts, how should one play into these particular stocks?
So, power sector, at least the likes of, NTPC have had the benefit of, two themes rather. One is the power demand, and then power sector itself doing rather well, and also the entire PSE space, doing fabulously well. Now, if you see 200 was the level that the stock touched last, before moving higher, this time around. It was in 2010 when the stock was at about 200 odd levels. So we've been maintaining that view. When the stocks move, in such a fashion, and they, hit their multi-year highs, the rallies will continue, and we've seen that happen. Now, 285 is where the stock sits currently. Again, like most of the stocks, this is also stretched. While we do believe in the theme and the entire power sector story, this also remains a buy on dips kind of a stock. We will wait for 260, 265 kind of levels to come around before we make any fresh positions. Existing positions, not an issue. There is momentum, play the momentum, ride it. 278 is where I would place my trailing stop loss if I have a position in NTPC.
All right, those are the trailing stop losses to watch out for. Make a note of that. But let's try and take up some viewer queries now. The first one is coming in from Raja Pasala, and he wants to know your thoughts on an IEX. He wants to know if it's the right time to average this stock, given the fact that he is holding these shares at a rate of 159 rupees per share, or he wants to know whether he should wait for further dips to average it. The stock has not had a good run. In fact, any attempts at a pullback, are also not very convincing, right? So do you think, there is more downside and perhaps investors should wait before they average?
Nandita, not a big fan of averaging, so that's not something that we recommend. The only case where we recommend averaging is when the stock actually moves, higher after a base formation. And as you've rightly pointed out, the stock has not really seen a very successful attempt of, moving higher. When the stock doesn't participate in a fabulous rally like this as well, then it's perhaps, something that, one should consider, the investor should consider whether they want to hold on to this or not. Uh, every rise has been seen as an exit opportunity here. What I would do is I would place my stop loss close to 139 odd levels. If the stock breaches, that level again, I would exit. So averaging, I will not recommend. Hold on to this one with a stop loss of 139. I know it's a painful thing to book losses, but sometimes that's just a bitter pill that you have to swallow. So 139 is where I would place my stop loss. If that gets hit, it gets hit, and I move out and I look for another trade.
Right. Hope that answers your query, Raja. But the next query comes in on the pharma pack. Sun Pharma, Funny wants to understand, Funny PG wants to understand your thoughts on this particular stock. He wants to know whether it's, it warrants a fresh buy. There is some news flow around Sun Pharma this morning. It has signed a licensing agreement with Aclaris for an immunoinflammatory disease, right? And the agreement with Aclaris includes an upfront payment of $15 million or thereabouts. Pharma, yesterday it sat out of the rally that we saw in the markets. And I think, defensives haven't really been participating that much of late. So do you think fresh buy right now and wait for, an up move to kick in?
No, well, if I just put it in context, the defensives, especially the pharma pack, was actually moving much before this recent rally came into the market. In fact, even the likes of Sun Pharma, if you see 30th October, not too far back, right? I mean, the stock was trading at about 1100 odd, and we've already seen 140 odd point rally in this one. So a consolidation was there and a breakout was due, and we already saw that. Now, while Sun Pharma itself has everything going for it in terms of the technicals, the volumes have seen a decent pickup, the momentum indicators are showing a fresh run and far from overheating. So it suggests that there is steam on the upside. If I look at the levels, 1275 and 1290 are the levels that I would look at for Sun Pharma, and my stop loss would be close to 1210. However, if I may, I would recommend an alternative from the Sun Pharma stable itself, which is Spark, Sun Pharma Advanced Research. This seems to be on a stronger footing. The stock had given a breakout. There was a dip, and even that has been bought into. So we're slightly more bullish on Spark, Sun Pharma Advanced Research, than Sun Pharma. Here, our near-term targets are 299 and 310, and the stop loss would be close to 270. So both stocks, the investor or the trader might want to keep on their radar before taking a position.
All right. Hope you have taken note of that, Funny. Hope that answers your query. But the next query is coming in, I think, from Debu K. Since it is from the pharma space, Mankind Pharma, I thought I would just take it up. It has managed to stage a good recovery from 52-week lows. Still away off from the 52-week highs of 2041 or thereabouts, but it's heading towards that. Do you think this momentum is going to continue on the charts?
A little watchful here. I know Mankind Pharma had actually seen a bit of a volume uptick in the last couple of sessions, and the stock's taken support about 20-day, at about its 20-day moving average and rebounded from there. But there's the resistance, close to this 1950, 1975 level. And once that is taken out, perhaps the stock could move higher. But otherwise, I've got a couple of other names which are doing well in this space. So I wouldn't really be too keen, and I wouldn't put this too high on my list. But most certainly, I will watch out. If the 1950, 1975 resistance is taken out and the stock trades above that, is when we see a stock moving, closer to the 2050 levels, which is the recent high that it hit. So sure, the momentum seems to be returning, but I'll be, a buyer in it only after the resistance levels are taken out.
Right. That's the view then on Mankind. Hope that answers your query. But last query, this one is coming in from Som Mendigar on Aira Realty. Anything you're spotting on the charts here? Would you advise investors to look at this from the realty pack, or do you think stick to the larger plays like DLF, perhaps the Prestige Estates?
So interesting stock, Nandita, just that, it doesn't really get captured in a lot of discussions. And, if I'm being completely honest, I haven't really tracked it as closely as I have, the other stocks from this space. But even if I look at it as a quick, glance, there is very clear RSI negative divergence, which is suggesting that the strength of the rally is perhaps fading now. So I wouldn't really look at buying, this stock here. I will wait for some more momentum indicators to give me a confirmation. So for now, Ajmera Realty for me would be an avoid. Shriram Property, the stock has actually been doing well. Yesterday also we saw a block deal or two in it, and very heavy volumes. So that's something that is on my radar from the cash segment. Otherwise, you've always got the likes of Godrej Properties from the future space that you could look at. So Ajmera Realty for now for me is an avoid.
All right, Ajmera Realty is an avoid. Hope that answers your query. But with that, we've come to the end of the query segment. Kush, leave us with some recommendations for our viewers this morning, please.
Sure. A couple of names that have popped up on our radar. One is PNC Infra. This entire space has been doing well, and this is one of the names that has been a bit of a favorite for if you see the institutions and the PMS funds. The stock had corrected a bit, but it's rebounded, and how? And yesterday we saw a volume uptick as well in this. It's actually now crossed all of its near-term averages and trading higher. So we'll have PNC Infra on our radar. The near-term targets on this are 360 and 370, and my stop loss on this would be 345. As far as the other stock goes, we've got Awas Financiers, slightly different structure compared to PNC Infra. The stocks actually made a bottom close to 1400 odd levels. Twice we've seen the stock come to this level and then rebound, and volume upticks in the last couple of sessions, suggesting that this stock is ready for its next leg of up move. So for Awas Financiers, 1520 and 1555 are near-term targets. 1460 is where I would place my stop loss.
All right, Awas Financiers and PNC Infratech, two stock recommendations coming in from Kush. With that, Kush, always a pleasure having you on the show, and thanks a lot for answering all our viewer queries as well. Well, with that, we've come to the end of this edition of Morning Trade, but I would like to take this opportunity to wish, my colleague and the director of the show, who is a very integral part of the show that we bring to you every day at 8:30 a.m. Ritesh, wishing you a very happy birthday. Hope you have a great year ahead, and keep helping us, bring this show for our viewers every morning at 8:30 a.m. But for all our viewers, stay tuned. 9:15 a.m. when the market opens, whether or not we hit that magical figure of 21,000 or not, well, we will be watching out for that. But of course, I'm out of the studio, but you guys don't go anywhere because coming up next is Opening Bell.